Hello and welcome to Investing Confidential. S&P 500 still going higher. I haven't done a video in a while, but I told the last time I said the S&P keeps going up and it keeps going up. There's no end in sight. It's a manipulated index. I'll go into something that's going on, but it's not reality. It's not reality, folks. But if you own the SPY or your long futures, you just stay long. Okay, because the powers that be, meaning the White House, the Fed, Wall Street, they do not want it to go down. Wall Street had its own reasons. They need to. Wall Street's business model is dead. They need IPOs. They're losing money. They're in a decline, and they're trying to reverse that decline. I need the market to stay higher. White House, obviously, election here. The Fed, look, Powell's in the hands of the private equity. I'm going to go into all this. Uh, Inflation is higher, sticky, no end in sight. Gold's at all-time highs versus the dollar. If you look at it relative to the cost of the cost of buying a good with buying food or whatever with gold, it's a 3,000-year high. Okay, gold's been around for thousands of years, but it's never been higher. Okay, rate cuts not happening. No one cares. They drove the market up with rate cuts. Now they don't care that there's no rate cuts. Okay, U.S. is funding 2 wars. Interest payments are exploding. No one cares. Congress keeps spending like drunken sailors, $1.7 trillion budget. Now they're going to pass more war money. Nothing for the average American, but no one cares. The S&P keeps going up. That's because the economy's strong, right? No one cares. The economy's strong. Well, for the rich, it's strong. For the average American, the economy is not strong. The economy is in recession for the average American, but not for the rich, not for the elite, not for the people backing the Fed, the White House, and Wall Street. Okay, so let's start with inflation. All right. Remember, with this recent market rally, which has been incredible, right? It's something like 28% in a month on the S&P, some ridiculous amount. We've gone from anticipating 6 cuts to today, we had a Fed official on TV saying 1 to no cuts, most likely no cuts. He's talking about cuts in 2026. This is the head of the Fed in Atlanta. Why is he saying that? Powell's saying the complete opposite. This guy's not in the pockets like Powell of the private equity like Powell is. So why? Inflation, folks. Okay. They told us, they told you, Powell told you, the dove, that inflation was dead. Wall Street told you it was defeated. Goldman Sachs, as you see here, told us there was 6 rate cuts coming. Now they've reversed. And I said, Wall Street desperately needs rate cuts. Without rate cuts, they can't shovel these IPOs out to the public, and they can't make money. Without rate cuts, M&A, which has been strong recently, will dry up again. Okay? But inflation continues to be hot. Housing prices, only because there's no sellers, very little demand, but there's no sellers, continues to stay high. Again, feeding inflation. Now, the worst of it all for these people, crude is breaking out. Breaking out. And Mexico, along with other OPECs, they're manipulating the oil market. Okay, this is a present for the outgoing Mexican President AMLO to Biden. He's saying, F you, pal. F you, pal. CPI, I don't know when it's coming out. It doesn't matter anymore with these manipulated. Remember, everything the government puts out is manipulated. Makes no sense. It skews positive for the government, skews positive for Wall Street, but yet they can't stop what's happening around the world. They can't stop what has already happened, the money printing, the spending. CPI will be hotter, will be higher. It's not going down. Yet, consumers like you and other people think inflation is going lower. But now because look at the S&P. No one's selling it. And here you see consumers have been manipulated. Fed, government, Wall Street, total manipulation. They must keep the folks, the S&P, as I told you, is the key to the entire world, the one macro index. Forget about Bitcoin, forget about gold, forget about interest rates. It's the S&P, the only thing holding everything up. Okay? Rate cuts? I mean, these people are stupid, okay? They're fools. Well, we know the White House is full of a bunch of morons, okay? The Fed is completely manipulated, Powell at least, by private equity, so he's not making rational. And Wall Street doesn't care about anybody but their own paychecks. And so they're calling for rate cuts, and yet they want to keep the stock market up. They want to keep GDP supposedly higher, 2.5%. But inflation is sticky, going higher. They don't care. They want rate cuts. They want rate cuts with inflation going up. Why? Well, I told you why Wall Street wants it, and obviously, it's a presidential election. And Powell again is a puppet of Carlyle, Blackstone, all those clowns. Okay, so no rate cuts. Inflation will continue to be hot, but the logic tells you the S&P should collapse. It's not. Okay, let's talk about stocks right now. The disconnect between the S&P and rate cut expectations, as you can see here. Okay, it's an inverse. So what we're looking at is the probability of rate cuts. Okay, falling. Yet look at the S&P. Look where we started back at the end of 2023. The market was about to collapse, and all of a sudden, hey, rate cuts coming. For no reason. They just said rate cuts coming. And the market took off. Massive move in the market. Massive. And now, since the beginning of the year, there's no rate cuts. Inflation is higher, and yet the stock market just keeps going up. It makes no sense. It just keeps going up. So the massive disconnect. And then the S&P at its current level, it's pricing in no risk. There's no risk. We know that there's risk, but the S&P is pricing in no risk. This is very dangerous. And remember, the S&P is part of, as you can see here, part of these leading indicators. Okay? The indicator's telling you that, as a leading indicator, is telling you that growth is coming in the economy. But as I mentioned to you, the S&P is no longer. It used to be, stock markets used to be leading indicators, no longer. So the movement of the stock market has nothing to do with the economy. And look at flows versus into the US versus anywhere else, any other asset class. This is a bubble, folks. But bubbles can go on for a very long time. This is a classic bubble. People are just pumping in money into the US stock market like they did to Japan, like they did to internet stocks in 1999, 2000. They're just going to keep going up. I have no idea what's going to pop this bubble, but something will. Okay, going back to leading indicators, okay? This is a very interesting chart. What it shows you is Wall Street unrealistic expectations and manipulation versus Main Street. Why do I say that? Leading economic index on the red up. What's making it go up? Look at stock prices. Believe it or not, stock prices are part of this. An average work week. People are coming back to the office. Not that many, but so that can be manipulated along with, again, S&P up. Without these two things, this leading indicator would be negative. Because look at what matters. ISM new orders, negative. Consumer expectations, negative. Interest rate spread, again, 10-year versus 2-year, recession, negative. All of these things are economic, real economic. Consumer good orders, very low. Very, very low. Little pickup in building permits, jobless claims. So all of these things together, without the stock market, leading indicators would most likely be flat to negative. Leading economic indicators depend, like I said, everything depends on this S&P. This is insanity. Okay, now we have, as you can see here, another insanity. We have the Magnificent Seven is now the Magnificent Four. Okay, Magnificent Seven is now the Magnificent Four. Okay, what happened? Well, Apple, as we've been finally, is disclosing the fact that they can't sell iPhones like they used to. There's no demand. The product is good, but there's no demand. Versus the $3 trillion market cap that this thing once had. Okay, then you got Tesla, which has fallen by the wayside. Okay, Tesla, what they sell high-end luxury goods, right? High-end luxury goods. And what happened to Tesla? Demand. No demand, or rapidly falling demand. So what's left? You got NVIDIA, you got Microsoft, you got Amazon, you got Alphabet and Meta. The Magnificent Seven. Magnificent Four, Magnificent Five. I don't know what you look. Bottom line is these pundits are telling you that the Magnificent Seven, now Magnificent Five or Four, is positive. These people are insane. So 7 stocks moving most of the market. Now only 4 or 5 stocks moving most of the market. This is the worst breath I've ever seen in my entire career. And I've had a long career, decades, trading stocks, analyzing stocks. I've never seen this before. And they take, and valuations don't matter either. Okay, again, look at the US versus anything. Extremely expensive. But there's one positive thing. Okay, US pensions. They're overfunded finally. I don't know if you remember years ago, there was all US pensions underfunded. They, all these pensioners are going to go. Well, now all the pensions are overfunded. But guess what, folks? There's no more pensions for you. There's very few pensions outstanding anymore. Very few. Today, companies don't have pensions anymore. Used to have pensions. Okay, so when the stock market goes up today, it's not benefiting you. It's benefiting the rich. The 1%, 2%, whatever you want to call it. It's a disgrace. A disgrace. But there is, for an investor who wants to really buy good companies, hold, there is very, very good news. And the good news is that when it comes to correlations, as you can see here, we are at one of the best times to buy stocks, not SPY index funds, not options, not Bitcoin. We're talking individual stocks. So what does this mean? Correlation, basically, what you want is when there's a high correlation, that means everything is moving together. Everything is going down, everything is going up. Okay, that's the worst time. You don't want to buy anything when you have high correlations. But when you have low correlation, that means you can make money. That means you can pick one stock and you could outperform an index finally. Significantly. Today, you buy the right companies, and those right companies for a U.S. investor is U.S. small caps, you will significantly outperform everybody. So the big question, what do you do? How do I pick these stocks? I'm not a stock picker. I'd like to buy funds, okay? Look, folks, if you want to make money going forward, you're going to have to become a stock picker. Now, I've said this many times. There's a lot of books out there. One Up on Wall Street. It's a very easy read. It's a great book. But there's a lot of tools now, especially AI tools. One, I'm not going to promote it, but FinChat is one that's out there. They've been adding thousands of, I think they have thousands of stocks already on. You could ask questions, so it's not like you have to go in and analyze something. You could say, what companies have in this sector have the lowest PEs, whatever. But it's FinChat. Take a look at it. But you need to buy individual stocks. Forget about these funds. In the U.S. today, in the U.S. Now, finally, we've got some charts that are just very concerning. Okay, very, very, very. These are frightening charts. First, we have, as you can see, interest payments on the U.S. government debt. Now, I mean, I don't know about you, or if any bank, or if someone came to you and they want to borrow money, and you looked at this and you saw that their debt doubled in 2 years, and they're still borrowing money, and they want to borrow money from you, or you're holding that paper. I mean, I'd be running. We are headed for another downgrade. Now, I know that these rating agencies are manipulated. They're paid off. They're bought and sold. But at some point, they have to do something. This chart says that this is insanity. We have the Congress approving 1.6, 1.7 billion in expenditures. We're sending hundreds of billions overseas for wars that we shouldn't be involved in. That's right. We spent $6 trillion in the Middle East. Now we're going to spend God knows how many hundreds of billions again in the Middle East with no real positive outcome for anybody. And we don't have the money. We don't have the money. Look at going back. Interest payments, pretty reasonable up until middle of pandemic, 2020. We had a change in the White House, and we have a group of politicians, both Republican and Democrat, who believe it's better to print money than raise taxes. And boy, are they printing money. Because these budgets are just money printing exercises. Oh, we'll spend 1.5 billion here, 2 trillion there. It don't matter. They don't care. They don't care. And by the way, this spending is causing these payments to go up and up and up. That's the only reason the economy is showing any kind of growth. That's the only reason. And they're not worried that by the end of this year, we'll be putting up 1.6 to 1.7 trillion in interest payments annually. They don't care. But if you're under the age of 40, you better care. And you better vote. You better vote. Forget about the presidential vote. It's the Congress, these maniacs in Congress who don't care. They're all old. They don't care about the future. But you should, because this chart should scare the crap out of you. And then you got interest on credit cards. Now, the reason I'm showing this is because balances at credit cards have exploded. Absolutely exploded. I've shown other charts. I'm not going to show these charts every time but I mean, if you have and unfortunately, the young people, and again, this is all demographic facts, that most of the young people in this country below the age of 35 have massive credit card debts. Massive. And you're paying the highest ever in recorded history for those debts. It's like mob VIGs, 25, 36%. This is crazy. This is crazy. And the reason that there's any kind of movement in the economy is because they keep giving you more credit cards to spend, to spend, spend. And then the result is this. Just look at the saving rates. Gone. Nobody's saving money anymore. Remember save for a rainy day? No. This number is about to plummet even farther than lower than what you see here. Much, much lower. And finally, U.S. government has a plan for you folks. They have a plan for all this message you can see here. Joe Biden wants the government's the Fed putting out what they call digital currency. They want to take advantage of all you, they want to manipulate all you crypto people to buy digital currency, the US digital currency, which will lead to a social credit score, which will basically mean the final nail in the coffin to the American dream. If you don't fight this, you deserve everything you get. Everything. This is tyranny. Digital currency by the government. This is everything complete opposite of why Bitcoin was created. Bitcoin was created to get away from the government. Now the government's going to take Bitcoin and manipulate it for its own purposes. That's why they have Bitcoin ETFs. And there'll be more of them. There's a million of them now. There'll be a lot more of them. Because they don't want you to buy Bitcoin. They want you to buy the ETF. Because they can control you then. And then they want to come up with a digital currency because the dollar is going to be worthless. They know that. Will it replace the dollar? Digital currency. Backed by nothing. By nothing. Which will lead to social credit score and the end of the American dream. So stay long until the crack happens. I don't know what's going to cause it, but right now there is nothing right now that the stock market's worried about. They drove it up, as I said before, because we're going to cut rates 6 times. Now they're not going to cut rates. Guy says 1 by the end of the year, but most likely he's talking about 2025, 26. That's what he said, the Atlanta Fed, who, by the way, puts out GDP now, which is the most bullish nonsense I've ever seen. He's bullish. But he said today, no rate cuts, 1 by the end of the year at best. Watch the inflation numbers. Eventually, the market is going to realize, and they're going to realize that the emperor has no clothes. That the White House is manipulating them, that Wall Street's manipulating them, that the Fed is full of crap, especially Powell. And it'll all come tumbling down. But for now, S&P continues to go higher. So if you're an investor, as always, be careful out there.